3.5 minutes left before the closing bell rings, and as you see, the investors out there are not taking their finger off the eject button. The Dow is down 242 points. Let me bring in Mark Lehmann, JMP Securities president with $2.5 billion under management, and Moody's chief economist John Lonski. Guys, they may not be lifting their finger off the eject button. They're at least bringing the pressure off a bit, Mark. But what do you attribute to the sell-off today after a big gain yesterday?
I think you just have general nervousness in the investor community. You've got a Fed that's been very, very active, at least in the dialogue like you've been describing. And I think these times intra-month, and September is sometimes the cruelest month for the markets. I think people are just getting a little nervous. They're looking at a summer that we've had kind of a general ascent of the market with low volume and low volatility. And I think people are selling right now and worrying about the Fed, and maybe they'll come back in the fall, and that's kind of what we're expecting at JMP.
John, open a can of whatever you open on the Fed when you're angry about it. You said, I won't be seeing you in, all the old familiar places in September. The Fed will not touch rates, is what you're saying in September.
Yeah, despite all of this concern, the latest Fed funds futures contract assigns only a 15% likelihood to a rate hike next week at the September 21st meeting of the FOMC.
But the markets loved that yesterday,
that probability
John.
of a rate hike doesn't break above 50%
Why not today?
Until the December 14th, 2016 meeting. And by the way, if the market's so sensitive to a tiny increase by Fed funds from 3/8 of a percentage point to 5/8 of a percentage point, that tells me the underlying fundamentals aren't all that great.
Mark, you can still make money in this market. How are you doing it for your clients?
I think this market has benefited those who have patience and buy discipline as well as sell discipline. Some of the best performers of the year, like Facebook, like Amazon, have had intra-quarter movements of over 10%. I think about back, Liz, in March, Amazon was a $400 stock, and it's approaching $800 earlier last week. Facebook got in the 90s, and it was $130 last week. Those are the kind of moves that, unfortunately, when you have a market that's this nervous, you're probably going to see. I think you drop your buy interest, you pay attention to intraday volatility, you get confident in the fundamentals, and you get ready to strike when you have that kind of volatility that we've been seeing as of late.
John, how bad or how okay is the U.S. economy? I'm not going to say great. I think we know it's not great. Growth at 1.2%, but you've got investors watching right now. They want to buy.
Still, subpar. We had a Fed Governor Brainerd the other day talk about a 4% annualized monthly increase by July's real consumer spending. Boy, is that ever misleading. If we look at some of the latest data on auto sales, unit sales are down from a year ago in July and August. Index of pending home sales for July is down 2.2% from a year ago, despite a 3.5% 30-year mortgage yield. My goodness, imagine what's going to happen to housing if we have a 4% 30-year mortgage yield.